Hi Matthew, I'm Fabian Baker, the Managing Director of Kingsrose Mining. Kingsrose is a company that formerly operated a gold mine in Indonesia, but we're in the process of selling that, and we have gone to a shift in focus to exploration. We've recently acquired some exceptional assets in Scandinavia with a focus on platinum group elements, nickel and copper, and we're advancing those with our substantial cash balance, which we're adding to through the sale of our mine in Indonesia.
Hi, I'm Joe Kaderovic. I'm the CEO of Cobalt Blue. We're the 100% owner of the Broken Hill Cobalt Project. That's a top 5 ex-Africa cobalt producer. It's a unique primary cobalt operation with an integrated mine refinery that will ship cobalt from 2025 to enable over 300,000 EVs per annum for 20 years. Thank you.
Hi, Matt. I'm Tony Rivera. I'm Managing Director of Azure Minerals. Azure Minerals was for many years operating in Mexico, but when COVID came along, we sold our assets in Mexico and refocused back into Western Australia. We acquired the Andover Nickel and Copper Sulphide Project, where we've been working actively now for 2 years. We've defined the initial mineral resource. We're currently drilling out a second deposit, and there'll be a second nickel and copper resource announced later this year. And we've got many other targets where we're currently drilling at the moment. And Andover is shaping up to be a project that will be a nickel camp in its own right, with multiple deposits or mines feeding into a central processing facility. And we have a scoping study underway at the moment, and that should be ready for publication in the first quarter of next year.
Thank you very much, gentlemen. Fabian, Joe, Tony, welcome to our little panel today. We're going to be talking today about subjects, topics, variables, and other things pertaining to how we, retail investors, should feel about the investment opportunities in front of us today, some of the investments that we're in. But we've all got something in common. We're all very, very nervous about what's going on out there at the moment. So, like Fabian, I'm going to start with you, if I may. You have kind of segued over to Scandinavia. You're looking at PGEs and nickel cobalt. You're very much focused on that kind of European ecosystem, but you're being affected by what's going on in the world, just like every other junior mining company at the moment. Are you nervous? Should your shareholders be nervous in this environment?
Well, I think the first point to make is, I think the longer term fundamentals behind commodities and certain ones in particular that drive new technologies going forward is in a long term, with a longer term view, very strong. And that's also reflected in government policies more and more so. So I think the current lack of confidence in the market and caution that we're seeing in investors is hopefully more of a shorter term approach. And I think the longer term prospects are still very good. So that gels very well with what we're doing. We take a long-term view on exploration. It isn't a short-term business. The fundamentals are, in our view, what's key. And so the old adage, the rising tide floats all boats. I think a rising market is less challenging. It's what you do in these times that set you up for success when things do improve. So we're well positioned for that with focusing on those fundamentals of really good quality assets that are well funded for us for the next 2 or 3 years at least to see us through, a weaker sentiment and to drive those forwards with an adequate team and budget to do what's needed to be successful.
Right, and Joe, you're a slightly more advanced project. You're in development phase. You're building demonstration plants. Are you more or less immune than exploration companies?
Look, I'll just build on those earlier comments. We just keep on keeping on. So we're looking at a very strong development pathway. So for us, that's an Aussie 50 million spend effectively on technical studies by middle of next year. We're making product, so we're making the final product now for customers, and that's being shipped. So all of this development work that comes ahead of EPC and then construction, whether the market is tanking around us or whether it's going gangbusters, our clients ultimately are looking at cobalt dated from 2025 onwards. So long dated assumptions in commodities don't change in a heartbeat. Spot market does. But long dated assumptions are built on well entrenched views, and we're dealing with those who are making the industry. So we're very comfortable that nothing in the long term is changing. Indeed, I think the tailwinds are building. We're very comfortable with our own position in terms of funding and the strong development pipeline. And the next 6 or 12 months will be what they'll be.
And what about you, Tony? You know, you've obviously offloading your Mexican asset focus back in Australia. Why was that? Was that just a case of let's get focused on a tier 1 jurisdiction? Was that get focused on battery metals, which is might make in terms of the long term prospects of the company might make things a little bit easier?
Well, we found that operating in Mexico was becoming more and more difficult. And then when COVID came along, it virtually made it impossible for the foreseeable future at that time. And we made the election to put everything on care and maintenance and pivot back into Western Australia, which is a tier 1 exploration and mining jurisdiction. And we were looking for nickel and copper and gold assets, and we were able to acquire interests in several different projects, including the Andover Nickel project. And it just so happens that it was a project that was acquired at just the right time. And Azure is probably in the middle between where Cobalt Blue is and where Kingsrose is. We're a company that has probably advanced past the basic exploration stage. We're now into the resource definition. We're also carrying out the various development studies, and the near-term price fluctuations of the various metals, particularly the ones we're interested in, of nickel, copper, and cobalt, are in some ways mostly irrelevant because, like Joe, we're looking out several years into the future to be able to develop the project all the way through the feasibility study and into the operational side. So, yes, there are short-term fluctuations and volatility going at the moment. But if you're a company with a really good project, then you can see several years out in front of you, then there should not be a problem going forward.
So, Fabian, tell me this. I'm a retail investor. I know that it's high risk, high leverage type investing to invest in exploration companies. But at the same time, I've always got to have a view on the thematics which will work. I'm feeling slightly nervous about the prices seem to have come off in terms of nickel and copper in recent weeks. Again, should I be nervous or am I buying into the right thesis?
Yeah, well, look, I think it's moments like these that are opportunity actually for investors. You look at pretty much across the board at what's happened to share prices over the last, particularly 2 or 3 months, and even a little longer. With the view that the long-term fundamentals are there, then these are buying opportunities. And so what you need to look at is what are the specifics of the company or the project, et cetera, that you're thinking about investing in. And you're looking therefore for those companies that have those fundamentals in place. Exploration and mining is a long-term business. And so at times the junior market can be a bit inefficient in how it funds and supports exploration companies with small cash balances, living hand to mouth, and they can't take that long-term view. I think what we hope to provide, and I see others here on the panel and elsewhere, is an opportunity at a quality asset, and then the cash backing to ride through those sort of shorter term ups and downs. So absolutely, now's a buying opportunity, but you need to find those companies that have the fundamentals in place that will be well placed to come out of that and accelerate out of that ahead of others.
Okay, Joe, you kind of moved down that curve, as it were. You're a development company now, so in terms of fundamentals, I suspect you've got a little bit more of a view of what it takes to kind of get to the stage you're at and hopefully beyond. So fundamentals mean what to me? What should I be thinking about?
Yeah, I'm smiling because my wife's a financial planner and she hates me giving this kind of advice, but I'll do it anyways. Just make sure she doesn't see the segment. Look, I've always thought when we were an explorer or in current development, there's really 2 choices for investors, and it comes down to this: pick the right commodity, and if you believe in copper, nickel, cobalt, and you still believe in it, then what does the next 6 or 12 months matter? It doesn't matter. And the next question really is simple: pick the right token, pick the right company that'll exploit that commodity. So it's commodity and company. Once you've picked those 2, everything else will fall into place, whether you're an explorer or a developer. In company terms, we get a lot of inquiries, as I think all the other panelists do. It's all about assets and management that can bring those assets to production. And in terms of management set, look for strong development pipelines, look for punchy timelines, look for punchy deliverables and real examples of investing, whether that's in the ground or ultimately in development and the other technical work programs. So it's not rocket science, but it does take you to stick to your conviction during these tougher times.
And what about you, Tony? I mean, you're at exploration stage right now. It must seem bleak out there for an exploration company.
Well, that's the thing is that we're past that exploration stage at the moment, and we're sort of in that development study stage as well as still doing a lot of drilling as well. But what people still need to remember is that only 2 years ago, metals prices were probably half what they are today. And we had a huge uplift. So metals prices do fluctuate up and down. That's just the nature of the business that we're in. And if people can look beyond that short-term weekly or monthly cycle, and you can look out 1, 2 or 3 years, things do turn around, and they turn around very quickly. And we've seen that in 2020, 2021, 2022, just how quickly metals prices can turn around. And, for example, zinc, not that I'm looking for zinc, but zinc trebled within 2 years, and nickel doubled. So there are some really good long-term opportunities out there, but you just have to have the belief to stick with it.
Okay, but if we look at the kind of global picture at the moment, you've kind of got China just coming out of a kind of COVID lockdown. You've got Europe sort of trying to get their kind of, well, you're all pretty much battery metals, trying to get their act together. They're throwing money at the problem. The US is promising large infrastructure development programs. How do you guys take advantage of that? Why are you looking so confidently, at the kind of broad market and saying, what, this thesis is absolutely spot on. We're in the right space, and therefore, me as an investor, I should be, learning something from that. I should be, listening to you. Fabian, what's your message to shareholders and to the broader market about why you're in the right thematic?
Yeah, well, the market and market sentiment from the investor side is sort of only one part of the picture here. What makes a successful exploration or development or mining company, takes a lot more ingredients. And so from our point of view, you may have choppy markets, but that recognition of the importance of domestic supply within Europe in our case, and of critical metals for these key industries. That feeds through to the mindset of government, which has an impact on permitting and can filter through into the communities as well, who, people are starting to take, much more of a personal interest in their carbon footprint and, the future of our planet. So, from our point of view, even though we are with our new assets in Scandinavia at a very early stage, we're doubling down on those other factors, because there's countless number of companies that may have even had a good asset, but have come unstuck and haven't managed to go the distance because of permitting or community or permitting, government issues. So, we are putting money into and effort into those sorts of foundations as well. So it's quite unusual for a company of our stage. We have quite a substantial sustainability team because we're in Scandinavia. It's front and center of the agenda there. And what we're doing is positioning our projects even now from day one with solid foundations with the communities, but also even an understanding within government and the EU that well, our assets could be one of the answers to this EU Green Deal and an action plan on critical raw materials. So yeah, there's a lot of other factors that go into making a successful business in our industry.
But what are you hearing out there in terms of conversations? Okay, I'll stick with you, Fabian, if I may. So you say you're in the right part of the world because the kind of various green initiatives across Europe and the amount of money that is being thrown at it would suggest that people want to talk about this subject. But what are they saying to you that gives you comfort that your business will be allowed to thrive? And I say that in the context of looking in South America, where governments and politics are perhaps getting in the way of mining. So what's so special about Europe?
Well, this is one of the reasons we've made this transition to Scandinavia. The timelines involved in what we're doing, in some aspects, on face value, might seem extended, but at least we know what we're dealing with, and what we're dealing with is generally a rational system and a well laid out system. So there's a permitting process for us there that we can rely on. And again, that thematic around recognizing we can't just outsource Europe's production of certain materials to places with lower human rights standards, lower environmental standards, etc., is starting to come through. And for example, even in the UK, not that we have assets in the UK, but it's sentiment. The British Geological Survey a couple of days ago released their first critical metals list. From our point of view, with predominantly platinum group metal dominant assets, it was really interesting to see both the EU actually and the UK place PGEs right near the top in terms of metals. And so when it comes to our asset, we're really hitting the nail on the head in terms of what governments are looking at.
Okay, interesting. And Joe, look, you've been doing the rounds. You've been out there looking and talking to strategic partners, people who are coming to your project Broken Hill, testing your products, and you've spoken to battery manufacturers and OEMs alike. I mean, what comfort are they giving you that I can perhaps lean on in terms of my investing decisions?
Look, I'll just take that earlier conversation a step further, because I'm often asked, is there a two-tiered market coming up in critical minerals, ethical sourcing versus non-ethical source? My response to that, based on discussions we're having, is there is no price for metal sources that are deemed unethical or non-sustainable in these new OEMs. There is no price. The Europeans clearly are leaders.
So meaning what? As in, they will not buy it?
They won't buy it.
Okay.
They won't buy it. Unless you're independently certified and you meet their standards, and those standards will change. So the CO2 levels will change, the sustainability levels will change. Unless you meet them today and agree on a pathway to meet them in the next 5, 10, 15 years, you will not get a contract to supply critical minerals for any one of the iconic automotive OEMs that Europe represents today. That standard will shortly be, I think, the North American standard as well. And that puts all of us on this panel, whether you're based in the EU or based in North America or Australia, I think we're in strong positions to effectively tailor our approach to meet those standards. I have little doubt, and obviously I've got a cobalt focus, I've got little doubt that the Canadians and the Australians will be setting up raw material feedstock industries to the EU and North America. The EU Parliament preferences its own, so they look to be self-sustainable. So if you're based in the EU, that's even better. But all of those standards are being in place now, and they're being regulated. And I'll give you an example of a very humorous conversation we had the other day with an iconic OEM. They took us through this, the IRMA platform, which is the Initiative for Responsible Mining. And it's a sustainability standard now that's probably the most onerous, but it's one that the likes of VW, GM, Mercedes and others are keyhold members of. And effectively, we're being, as Australian miners, being asked what was our attitude towards slavery and how we're going to ensure that it won't pass. So there's an assumption now, and I know that sounds silly, but you've got to assume that the sourcing for these companies going forward is agnostic to the source, and historically has been, in cobalt terms, heavily dependent on Africa. And so these style of questions, which for us are a gentle hurdle to come over, are ones that gives us a strategic advantage. So I think do not underestimate the opportunity set for those who can maintain these standards and deliver into them in the next decade.
So it sounds like it's easier to do business in Australia, Tony, is it?
Well, it depends whereabouts in Australia you are. I know that having worked around Broken Hill, it's a mining centre of the eastern part of Australia. Where we operate in the West Pilbara, it's the mining centre of Western Australia, and we've got iron ore miners, we've got oil and gas producers offshore, we've got great big salt producing ponds as well. There's a huge amount of mining activity going on there, and so mining is very well accepted both by the local population, the communities, but also by the local and state governments as well. So there's a very strong push to make these centres of mining in West Australia and in Australia, a lot more broadly, to be the go-to sources for these metals that the rest of the world is starting to look for. And certainly, I've been told by numerous people about the new restrictions or the regulations that the European Union is going to be implementing on materials that they want in the battery. So if you're buying a battery that's already been made, they want to know where the nickel came from and where the lithium came from and those sorts of things. So having a mine in Australia gives you a huge advantage over, say, someone who's got sourcing their materials from other countries.
Right, and interesting. And sorry, carry on.
Well, no, I'd pick up on what both Joe and Tony have said. This point that essentially, end users and buyers of these commodities going forward are going to be looking at, the sustainability footprint of those and where they're from. And that I think is something that's evolved even in the last couple of years, really, really strongly. And it's something for us in Europe, where we do have a history of mining, particularly in Finland. There's a significant mine just down the road from us, but still embedded in our decision making is, are the geological targets that we're looking for well suited to where the world's going? And for us, predominantly, we're looking at higher grade sort of underground, potentially underground operations that can have a much smaller footprint, and therefore, be more acceptable in terms of the environmental impact, and the sustainability impact more broadly.
Right. So Tony,
I'll just jump in there and agree with Fabian on that one. Is that the nickel project that we are developing up in the Pilbara, almost everything is pointing towards it having to be an underground mining operation. The days of having great big open pits, particularly near population centres, is gone probably. And so ours will be an underground mining operation. It's for environmental reasons, it's for cultural reasons, heritage reasons, CO2 footprint reasons. Everything is pointing to you minimise your surface footprint, and that just adds to the attractiveness of your project for the end users.
Right. And so, Tony, I was going to ask you, in terms of sort of listening to everything that you're hearing from the guys, I mean, and even some of what you've said, is like, do you have to approach advancing your project differently today than, say, 5 years ago, 10 years ago, because of these kind of the ESG component? It's front of mind. It's the first thing off people's lips. Does that make it harder, more expensive, more complicated, or is it just you just need to kind of work your way and navigate your way through this new system of?
Yes.
Right.
Yes to all of it. It is hard. I mean, if I want to go back far enough in history, 20 years ago, I was the geologist that found the Cosmos nickel deposits. From discovery to the producing and selling of the first concentrate was less than 2.5 years. Now you can't even do an environmental survey within 2 years. So things have changed a lot in the last decade or two, and even in the last more recently than that. So yes, we actually need to change the way that we operate. And we need to be able to do that. We need government to be able to be supportive. So you can't have one arm of the government supporting you and another arm of the government putting roadblocks in your way. So we really need this to be a company, community, government trilogy all working together.
Right. And are you getting that support?
Yes.
Right. Sort of.
Yeah.
Okay.
Yes, it is, but it's new. I mean, I don't think there's any problem from our point of view as a company. It's no problem from the local community point of view. It's bringing the government or getting the recognition from that the government themselves, they need to be on the front foot helping as well. And that's starting to happen now. It's both at a state and a federal level here in Australia. But I still think that the governments have got a long way to go.
And Joe, I could ask you, because you obviously got a $15 million grant recently. So, you obviously know how to kind of work the system. But, what is the government getting out of that? Why are they giving you that money to support your business? What does that relationship look like?
Look, I think just to step back, there's scale counts in terms of recognition. So there's a lot of exploration businesses around. The last time I looked, there was about 800 listed entities on the ASX that were exploration businesses. So to get the government's attention, you need to have a certain scale to you. So typically you have to be in development with at least a PFS and then a line of sight on the DFS. So our lives were transformed when we were granted major project status. And so that's an accumulation of all the exploration work we've done in our early phases and then all the other 12 modifying factors and technical studies under the JORC code that we've done since. So I think as an explorer, it was hard to get recognition, and you basically just did what the regulator told you, and those standards have changed. But what systematically accelerates you is a concierge-style service. So we're based in New South Wales. We've got a state significant development. We have a go-to point in that government. We've got a go-to point in major projects in Canberra. Canberra has subsequently created a critical minerals facilitation office, so that's a go-to point for those of us in that sphere. And that's made life just a lot easier. And once you're on that conveyor belt as being the next one or two mine of its type, then you start to get all that attractiveness. But it's a tough haul. To get to that end of the queue, you've just got to persevere with it.
Right.
But I've got to say the federal government, both the last one and this incoming one since the election, are bending over backwards to facilitate the delivery of these critical minerals projects.
Right. And Fabian, if I go to you here, it's kind of interesting times. And again, as we've said, retail investors, we're getting lots of inbounds. People want a little bit of hand-holding, want to understand what they should be looking at. I'm a bit long in the tooth. And, I expect a couple of guys on here who've been through a few cycles. You're comforted by the fact knowing that, look, these cycles happen every now and again. There's dips in the market and we come out the other side. It's fine. It's a kind of short-term event, but nevertheless, I still feel nervous if I'm looking at a sea of red on my screen. Are there any green shoots that you're aware of that I should be looking at, which may lend comfort to me until we come out the other side?
Well, I think, I think those green shoots sort of come, to some extent, come as a result of this downturn. So that shaking of the tree, and I think Matthew, in an earlier conversation, you put it this way: the dead branches falling off. Just that in itself is helping allow the companies that are better established for success basically come to the fore. So, as an investor, your job becomes a little bit easier because you're suddenly whittling down through these companies that are, being hit by this negative sentiment more strongly, who are showing their inability in that market to be able to raise money or drive the project forwards, etc. So it does help narrow the market to those quality companies that then you can with more confidence invest in, who will ride through choppier markets and then be well placed to do well when things pick up.
Well, I mean, you're in the lucky position of you're sitting on a bunch of cash, so in a very meaningful way, it doesn't affect you so much. I think everyone's share price chart looks fairly similar at the moment, the last 2-3 months. But if you're sitting on cash, you can get on with a plan. So in a way, do you feel that you're slightly immune to what's going on at the moment, Fabian?
Yeah, look, I watch the share price every day, just like many of our shareholders do. And as I see it, we've got to tread that fine line. Putting out great news in this market probably won't do a huge amount. But that doesn't mean you do nothing. I think you still need to drive forward your agenda and show that you can deliver. Maintaining a level of news flow and activity. You don't always need to find people to buy. You also need to give current people with current conviction a reason to hold and continued belief in the company. So our cash position and strategy does put us in a good spot for the current market, and we're trying to use it to our advantage. So yeah, we're working through some permitting aspects while doing a bit of exploration on our Norwegian project. We've got geophysics running there today, and that'll feed into a maiden drill program there. But on our sort of flagship asset in Finland, that's going through a permitting process that won't allow us to be drilling until later next year. Yeah. So we can move all of those things forward, but we can also we've also got a program looking for new assets. And again, this market gives us the opportunity where prices are slightly depressed. We can be a more nimble potential buyer or investor in an asset, and that for us we see as an opportunity.
Okay, interesting. I guess we could get onto how has inflation affected you, and maybe we'll come back to that because it's going to affect different people in different ways. But Joe, I just want to stick with this kind of green shoots thing. Like again, with conversations that you've had sort of bouncing around the world, what clues are you getting about recovery and imminent recovery?
Yeah, so we're well entrenched in discussions with major funds in terms of strategic investment, and the comment I'll make is both one from a fund and also one in terms of project finance on the credit side. The view that we're taking away is that it's the next rate rise or so that will determine whether the overall trajectory in terms of inflation is under control. So we've had one series of rate rises. In Australia, the new CPI numbers and next rate rise are due in the next 2 to 3 weeks. And it's less about inflation, it's more about interest rates and cost of capital. So inflation is the root cause from which the remedy may be the one that kills you in terms of the cost of capital. But in both cases, it's seen that aggressive central bank intervention will get this thing under control. It's a matter of how many whack-a-moles you've got to do. Is it whack it twice, whack it 3 times? But ultimately, this thing will be under control. And so the view we've got internally is that this will be done and dusted by the end of the year because of that aggressive view. The other one I'll give you is I'm dealing in terms of the IPO market with a legal firm, and they've told me that in the last 3 months, and this is a firm that deals with the large end of town in terms of listings, the last 3 months opportunity sets have dried up, but what they're now starting to see is the first of those pre-engagement style companies come back to look to get back into the market. So there's a sense that this thing will run out. All of those anecdotes are bullish in the sense of, I think we'll have a workout by Christmas or so, at least a steady state. Not to say the markets will rally, but will stop this inevitable sell down and panic. Once panic is arrested, we'll start to get stability.
Okay, that's interesting. It's kind of like the kind of behind the scenes stuff when you start seeing the engine turning again. That's interesting. And what about you, Tony? Are you seeing anything?
There's been a pretty busy year and a half where the cost of doing exploration and studies and the like, consultants, contractors, staff, etc., has been going up and up and up. And not only the price has been going up, but the availability of people to do the work has been quite limited. But that seems to be turning around a bit now. We are getting inquiries from people that are looking for opportunities, or drilling companies have now got more rigs than they had previously available. So things are turning around a little bit. It will reduce the cost of doing our business, over the next 6 to 12 months, which is a good thing. And as the other members of the panel have talked about, it's having sufficient financial resources behind you to be able to ride through this next few months and come out the other side still actually doing business. Yes, it's putting out good news is probably an opportunity for some people to sell into that good news, but you still need to work. You can't go into hibernation and sit back and wait for this to blow over. We need to continue to work, to develop, to progress, and continue to put the news out. And when the market does turn and the sentiment becomes positive again, we're in a good position. We're at the front of the pack to go forward. Yeah,
and I think that's true for all of you. Also, companies with strong fundamentals. I mean, just sticking with the kind of Aussie component here, Tony. I mean, are you seeing people raising capital at the moment? Or is that degree of confidence? Because obviously, it feels like a very expensive time to go and raise money in the market unless you're desperate or unless you've got a good use of it. So is that side of things on the up?
For the first 4 months of this year, most of the raisings were companies that were going out there and raising $10 to $100 million. And there were big licks of money being raised by companies who had good projects. Over the last month of the financial year, there was in June, it completely dried up. First couple of weeks of July, it's starting up again, but it's right at the micro end of town. So it's $500,000 to $2 million raisings are happening now. And there was a couple of stories about it in the media today about that. So things might be turning around, but I think people have been sitting on those that have got a lot of cash have been sitting on it and watching and waiting. But maybe things are turning around now, which will be good.
Okay. If you put a light at the end of the tunnel, which is kind of what we want, breathe more easily. Look, guys, I'm just gonna finish off by asking each of you, to put forward your investment case. Why should investors perhaps not on board with you yet be looking at a company like yours as so I talk about, and I believe this is all three of you, companies with good, strong fundamentals. Why you, Fabian? Why Kingsrose Mining?
Sure. Well, Kingsrose as of the last 12, 18 months, is an entirely new rebooted company. Okay, so the board and management has gone through a big shift. And we've been able to take the proceeds of our former mining operation and now focus these on exploration, and basically that real value curve, that really steep value curve that can be ridden from discovery through resource definition up to your economic studies. And so what we've been able to do is get hold of some assets in a great first tier jurisdiction in Finland and Norway, down the road from existing mines. And these are projects with historical work that we have a very clear geological understanding of the asset. And actually on one of them, we just put out, this is the Pennycat project in Finland, we just released a JORC compliant exploration target, which is an independently put together estimate of what a future resource might look like. And that has come in at between 2.8 and 7.7 million ounces of combined platinum group and precious metals. But importantly, it's perhaps at probably the highest grade of any PGE dominant exploration project globally. So we're sitting on an asset that is commodities, which 40% of which comes from Russia, and the other 40% comes from South Africa, where they're being hit by various issues in terms of power shortages, labor, and a lot of the mines are getting very deep and lower grade. So with that combined with the EU drive to domestically produce these, we're sitting in we think pole position there in Europe to drive forward a really nice high grade, low footprint PGE project.
Joe, what about you?
Yeah, so Cobalt Blue has a long life project. We're a top 5 scale ex-Africa, so this is a very meaningful introduction of metal to the market. We're an integrated mine refinery, so we are unique, though that's a word that's overused. We are unique in the sense no other mine in the world will make a battery or a precursor-ready cobalt sulfate. And the next 6 months or so, we'll be finalising operations at a large-scale demonstration plant. So we'll be turning 3,000 tonne of ore into over 3,000 kilograms of various products. They'll be shipped to partners. The difference this year versus last with the smaller scale is this year we'll be looking to pre-qualify that product. It's a very high hurdle in terms of purity of supply to get into the battery chain, but we're looking to do that by Christmas. So what shareholders can look forward to is next 6 months is a proof of concept from the demonstration plant, which will underpin the risk studies for delivery of the DFS and the banking lending towards that. We're looking for a partner, so we're also shipping these products to partners we're looking to create long-dated offtakes with, and again, that 25 onwards timeframe when we believe the hockey stick for critical minerals demand will pick up. And the final thing is it is a blue sky option. We're over-speccing our downstream sulfate refinery to take in excess of 5,000 tonne of metal equivalent, whereas our mine will only produce about 3,500 tonne. What we want to do is have first mover advantage in making precursor-ready cobalt in Australia, and then work collaboratively with the industry. Typically, cobalt is a byproduct of nickel in Australia. Work collaboratively with the industry to bring those cobalt units in and make a much larger portfolio of battery-ready product. Now, all of that will have surety around it between 6 and 12 months from now.
Brilliant. And Tony, why don't you take us out?
With our Andover project, Azure is perfectly positioned to actually take this all the way through into production. Within the 2 years since we acquired the project, we've made 2 great discoveries, which are now at the resource stage. But we're running simultaneously with the exploration and resource definition drilling, we're running a parallel pathway, which is the development studies pathway. So we're probably 3/4 of the way through the initial study, which is the scoping study, which should be ready for publication in the first quarter of next year. And then with things looking very positive, and so far they are, that we would look to take that straight through into the feasibility study stage. And we see this as the Andover project being located in the West Pilbara, just outside of the town of Karratha, and a very mining-friendly jurisdiction. That from the funding, from the permitting point of view, from the construction point of view, you couldn't get a more ideally located mining project. So we see this project as something that we can carry forward from now through the feasibility study stage, permitting, financing, and construction. So potentially by 2026, we could be in the production stage.
Brilliant. Gentlemen, thank you very much for your time today. I thought it was a really interesting romp through lots of the topics which, have concern retail investors at the moment. And I feel a little bit more comforted. So I would say this to people watching, listening to this, if you aren't already, please have a look at Kingsrose Mining, Cobalt Blue and Azure Minerals, 3 very strong battery metal thematic companies that perhaps you want to think about investing in. Thank you, gentlemen.